The paper dollar or the fiat dollar or the Federal Reserve note has lost 99.434%. Yes, that's why I said the dollar is collapsing, the fiat or paper dollar is collapsing. And I think, unfortunately for the world, because this is going to affect all currencies, this is getting parabolic. The collapse or the rise in gold and silver is going to get parabolic, and the drop is going to get really steep. The other thing is America's foreign policy is accelerating de-dollarization. And the last thing I'm going to say is, have you got gold?
The dollar's long decline isn't theoretical. It's already happened. Mario Innecco reminds us that since leaving the gold standard, the greenback has lost over 99% of its value. The last fraction left is eroding quickly, and once it hits zero, paper money won't buy much of anything real. At that point, only gold and silver remain as money that actually holds weight. History shows the same pattern over and over. In 1934, Franklin Roosevelt devalued the dollar overnight by revaluing gold. Then in 1971, Richard Nixon severed the link entirely, cutting the anchor that kept money tied to something tangible. If you look at the charts, from inflation to debt to asset bubbles, you see the inflection point. The curve steepens right after 1971, because that's when money became untethered. Fast forward to today, and the warning signs are obvious. Food prices are rising while wages can't keep up, just as they did in every inflationary breakdown before. Innecco points out that essentials like groceries are where people first feel the squeeze, the same way they did in France or Germany during past currency collapses. Meanwhile, Washington is doubling down with policies like tariffs against China and India. Instead of bringing strength, these moves push those nations closer together and away from the U.S. financial system. Every trade settled outside the dollar means more unwanted dollars flowing back home, accelerating the decline. For Innecco, the end isn't in question. It's only about speed. When it comes, gold and silver are the lifeline. Everything else is paper. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I did the calculation, and you can do it too. The paper dollar or the fiat dollar or the Federal Reserve note has lost 99.434%. Yes, that's why I said the dollar is collapsing, the fiat or paper dollar is collapsing. And I think, unfortunately for the world, because this is going to affect all currencies, this is getting parabolic. The collapse or the rise in gold and silver is going to get parabolic, and the drop is going to get really steep, as you can see by this chart here. And I've touched upon this chart, and I did an update on it yesterday. And you can see, you just do the price of gold and you do 1 divided by the price of gold on tradingview.com, and it gives you the opposite of the normal chart, which goes up, right? So this gives you a good idea, and it says zero really here. The thing is that from 99.43 to zero, or to 100% loss, that will be that's the period we're in right now. I can't tell you exactly how many years it will take, but not more than 10 years. I think we're in the end game, and what it will mean when it's 100% gone is that you won't be able to exchange your fiat dollars for these, and that's why it's so important to be able to stack some of these, and also silver for that matter. And we can look at silver later on in another day, but I wanted to touch upon gold today. So you can see here that there was a devaluation of the dollar back in 1934 by President FDR. I think it was January 30th. He devalued the dollar from or revalued gold from $20.67 per troy ounce to 35. And you can see that since 1833, it was at that same level. For 100 years, the dollar was real, was fixed weight of gold. They kept it at 35 from 1934 to 1971. And then they did the unthinkable. President Nixon, he detached money from reality, or the currency from reality, into mythical values. And that's why when you look at charts of any economic or financial indicator, from a long-term chart, you see that in 1971 things changed. It was because of that. And so the dollar is basically detached from reality. And unfortunately, people that hold dollars or treasury bills, notes and bonds, and euros, pounds, yuan, any fiat currency, they're going to be left holding the bag. And that's why I've been warning people about this for so many years. And I think we're very much near this end game. One of the symptoms that I've looked is to do with these books: Fiat Money, Inflation in France, Post-Revolutionary France, 1790s, When Money Dies, Weimar Hyperinflation. And both these books talk about how the first thing to go is the public's ability to buy food, how groceries really start picking up. Of course, iPads and computers and things that aren't really basic necessities, they might not go up, but even those go up. So I highly recommend you read these two books. I've heard a lot of, and I can see it as well when I go shopping sometimes, not very often, but I've heard from like my niece in the States, like her grocery bills have gone through the roof in Florida. And I've heard it from other people. Food is becoming unaffordable. Of course, for the very wealthy that have a huge portfolio of assets, they're doing well. Food is a small percentage of their income. But so the powers that be, they don't really see this. They're blind to it, and that's why I think they're always wrong, and they never do the right things, even though I think some people might argue this is all by design. And that's why I wanted to talk about President Trump, because what happened yesterday vis-a-vis Qatar and Israel, that's in my opinion, and I'm not making any political judgments, I just think that that's going to unify actually the Middle East, the Arab countries against Israel. That's not going to help the U.S. either. The other thing that Trump announced yesterday is that the EU should hit China and India with 100% tariffs to pressure Vladimir Putin. Well, they're not going to do that. They're going to double down, and they're going to focus on multipolarity. He's just given another impetus to BRICS unity. That's what I think is happening. And the quicker BRICS gets its act together, and I'm not saying BRICS are going to be perfect, and I don't think they will, but what it means is that the U.S. is going to be hurt by this, because countries won't want to deal with the U.S. anymore. So if you don't deal with the country anymore, you won't need its currency anymore. So a lot of those dollars that are offshore, held by these countries, they're going to come back to the U.S., and that's going to create a tsunami of supply. So that means less value. It's the law of supply and demand. So yes, is Trump doing this by design? It's possible, because Trump in his business Korea is known to have driven many many companies to the ground and filed for bankruptcy. Those companies and reorganize them. Can you do this with a country? Well, maybe he thinks he can. So I would say that this is dollar demolition by design. That's the policy that we have here. And the other thing is America's foreign policy is accelerating de-dollarization. And the last thing I'm going to say is, have you got gold? Because you're going to need it.
Mario Innecco points out that headlines calling China's recent negative CPI deflation completely missed the mark. Deflation means a contraction in money and credit, and that's not what's happening in China. What they actually have is falling consumer prices, something that stretches the yuan further and benefits ordinary people. In other words, it's stronger purchasing power, not an economic collapse. That stands in stark contrast to the US, UK, and Europe, where the story is the opposite. Prices keep climbing while currencies steadily lose value. Innecco highlights that the US jobs picture, which the media often paints as strong, has quietly been revised down by almost 1 million positions. Strip away the spin and the economy looks far weaker than advertised. The same goes for GDP. The only reason US growth looks positive is because Washington is running massive deficits. If the budget were balanced, the numbers would flip negative, exposing how fragile things really are. That's the definition of stagflation: stagnant or weak growth, eroding currencies, and rising costs hitting households hardest. The UK, meanwhile, isn't faring much better. Its latest idea is to create a powerful budget board to guide the economy. A move Innecco compares to Soviet-style central planning. Rather than encouraging real productivity or competitiveness, governments across the West are resorting to control measures, masking decline instead of addressing it. Let's get back to the interview.
But I also think that one of the reasons this dollar meltdown is accelerating is because of U.S. foreign policy. Even though President Trump says he wants to stop the BRICS, he's doing exactly the wrong things to try to do that. We'll look at that too. One thing I wanted to talk about is China's CPI. That came out negative year on year, I think minus 0.4. And you see the headlines in the mainstream financial press like the FT, China's fallen into deflation. Well, a negative CPI is not deflation. Deflation is when the supply of currency and credit goes down, and that's not happening in China. What we're seeing in China is lower prices. So the Chinese yuan in China is buying more, which is a good thing. So just wanted to put that out there. Unfortunately, here in the UK and the US and Western Europe, we have rising prices and our currencies are dropping. And I'm not saying the yuan is doing any better really on the whole, because they have big deficit spending, a lot like the US. And talking about deficit spending, we had the revision for the jobs number yesterday. Came out at almost 1 million. I think it was 950,000 less jobs from March 2024 to March 2025 than they previously thought. The previous year, they revised it by 800,000. So all these statistics, really, even the CPI, they're just like figments of politicians and statisticians' imagination. The economies are doing a lot worse. So what's really happening to the U.S. economy? Well, the U.S. economy and the U.K. economy and all Western economies and even the Chinese economy pretty much stagnant or in a recession. The only reason the numbers look positive in GDP is because of deficit spending. As you can see by this chart, the US is running an average of 6% budget deficits since 2022. From 2019 to 2021, it was even worse, of course, because of what they did during that period, that scamdemic, and I'm going to say it. So the way to calculate GDP is part of the equation. You add government spending, which doesn't seem right at all because governments don't create economic growth or GDP, right? But they do it in order to fudge the numbers. So if the US was running a balanced budget, the GDP would be negative. And the same thing goes for all other countries in the West, I would say. So I wanted to put that out there. Economy a lot worse. Basically, we are in a stagflation, stagnant economy, and a falling currency, which we're going to talk about, and rising prices. Not good for the general public. It's a third world country kind of environment, and that's why wealth inequality is going through the roof. The very wealthy, they're fine. They're doing really well because they're going to pump up the stock market even more next week by cutting rates. So what else did I want to talk about? Well, this has got more to do with the UK now. We have loads of problems here. They're going to present a budget in November. And the economy is going down the tubes because they keep interfering, taxing. So now Keir Starmer announces that he's going to tighten grip on UK economic policy with a powerful budget board. It says new group has remit to boost growth and avoid another bust up with business. The first thing I thought when I read budget board and boosting growth, I thought of the old Soviet Union. That's what they used to do. They used to think that they could direct the economy from a central place, and that's the same thing that's happening here. These socialists, either they're doing this by design, and I think it's highly possible. They think that they can boost growth. The best thing for Keir Starmer and his government to do is to butt out of the economy, let business do what it needs to do, cut the red tape massively, cut taxes, cut government spending, cut all the rules and regulations of employing people. And I'm not saying employers should be nasty to their employees, but the government shouldn't dictate what employers do. So that's the whole problem. It's not going to help people. And is it any wonder that the pound, just like the dollar, is continuing to collapse?
Striking when you step back is how the same cycle repeats. Paper currencies stretch until they finally snap, and every time the aftermath looks eerily familiar. Rising essentials, declining living standards, and a desperate search for stability. What Mario Innecco underscores is that the dollar's unraveling isn't just about charts or history lessons. It's about the lived reality of people watching their paychecks buy less each month while policymakers push narratives that don't square with daily life. The divergence between East and West only sharpens the picture. China benefits from falling consumer prices while Western economies lean on debt, spin, and increasingly centralized controls. At the core lies a simple truth. When faith in money erodes, societies pivot to tangible stores of value, and gold and silver have always been the final refuge. The critical issue now is not whether this turn comes, but how quickly the world is forced into it. As the cracks widen, the real question is whether ordinary savers and investors will recognize the shift early enough to shield themselves, or if they'll only wake up once paper promises have already been stripped of meaning. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.